The age-old debate, should I invest my money in the stock market or should I invest it in real estate? Stay tuned, you don't want to miss this one. Please note the full disclaimer. Hey guys, I'm very excited about this episode as it touches upon an age-old question, and that is, which gives you the better returns? Is it the stock market or is it investing in real estate? Sometimes the answer isn't so cut and dry, and it depends on the market, depends in what type of stocks. Is it mutual funds? Is it individual stocks? And even within there, is it tech stocks? Is it dividend paying stocks? In real estate, also a lot of important factors to consider. Is it condos? Is it small apartment buildings? Is it duplexes? Again, so many different strategies that we can go through and review. I'm going to keep it simple for this one. I'm going to look and make some assumptions based on some historical evidence on past returns in both stock market and real estate. And we're going to focus on what hits a little bit closer to home, and that's specifically in Toronto and the GTA. At the very least, you'll be further informed on some alternatives than just the standard advice that perhaps you've been given throughout the last many years of your life. So with that, let's dive in. So this is pretty fantastic and exciting. Take a look at this. Let's just pretend I have $100,000 in the bank. I have two choices. I can invest $100K in a rental condo investment in Toronto, let's say, or I can put $100K in the stock market. So scenario A, I pick up a $500,000 studio or one-bedroom condo in Toronto. I borrow the rest. I borrow the $400K as my mortgage. Then, but remember, I still only put in of my own money at $100,000. Alternatively, I put that $100K into stocks. I either think, Rick's got the magic formula. I'm going to buy, 9 different stocks. I'm going to diversify. I'm going to make a fortune here. Or I keep it safer and I buy, a couple of mutual funds. Now, let's just assume in year one that in this case, both the stock, the basket of stocks or the mutual fund goes up by 10%. And since the real estate market has been hot and condos have also in the past few years been increasing by quite a bit, let's assume also, just to keep things at even keel here, that the condo has also increased by 10%. So what happens? Well, as you can see in the stock portfolio, it's pretty straightforward. You started with 100,000, you've made 10%, so now your 100,000 is worth 110,000. So congratulations, that's a pretty decent return actually. You've made $10,000. Now let's look at the real estate side. That condo is now worth 550,000. So 10% on the 500,000 of that appreciation is 50,000. So your condo is now worth 550,000. Now why is that? Well, it's pretty straightforward. You're using other people's money, in this case the banks or the lender. The whole 500,000 is actually increasing at that 10% appreciation and not just your 100,000. So your 100,000 is now worth 150,000. So congratulations, that is a 50% increase. So there you have it, folks. I'm going to keep this one shorter and go into some other scenarios and details in future episodes. This was just a more simple exercise of comparing and looking at the power of leverage. So again, if you like this content, please hit the thumbs up, subscribe, and hit the notification bell for future episodes. Also, you can pick up a copy of my book called Get Rich Investing in Toronto Condos on Amazon.ca. There are links in the About section of my YouTube channel. That's it for now. So long.